What is Your Business Worth episode, where I break down business valuation that's been sent to me through emilynow.com, and I share some of my thoughts and some of the commentary in an attempt to help other entrepreneurs that might be wondering what their business is worth, what they can do to have it be worth more than what it is today. And my philosophy is a simple one. It's that being an entrepreneur is a lot of work. It's a lonely job task, and many entrepreneurs will fail. That's the statistics. That's the hard math. My thesis, however, is that entrepreneurs don't have to fail if they knew what they didn't know. And in my experience over a couple of decades, some of the things that entrepreneurs don't know is some of the stuff I'm going to talk about over the next couple of minutes. Just some very basic things about their business, how money moves through their business and how they can make it more successful, having a little bit of knowledge than not. And if they had that knowledge, they would be able to build very valuable businesses, and the failure rates would be significantly less. And if entrepreneurs are successful, that means the economy is doing well. That means communities are flourishing. That means people are getting hired. Innovative things are happening. And so in my little way, these business valuations are a mechanism where I can try and help out those entrepreneurs that want to. And I know it works because some of you end up reaching out to me directly, asking questions and comments about what I'm doing in my businesses and how it relates to your business. So let's get right into it. All of the business valuations that I do are completed at mlenow.com, and it doesn't cost anything to use the website. It's free. You can get your own free business valuation done at any time. And so what I do on these episodes is I just sort of stick in the math based on what someone has sent to me, and then we sort of take it from there. So in this particular case, someone is looking to purchase a business. And so I'm guessing that the reason they were looking for a business valuation is they were trying to figure out, okay, is this business even worth it? I picked this one. Of all the ones that are sent to me, I picked this one to use as an example because I think it reflects what most entrepreneurs think about their business and what they know about their business. And so if you're just listening to this, if you don't have the opportunity to actually see what's on the screen, what you're going to notice I'm doing is I am punching in pretty much zeros across the board. 0 assets, 0 liabilities, 0 equity, $365,000 of income, 0 for cost of sales, 0 for gross margin, 0 for expenses, and $45,000 worth of profit. And as I continue talking over the next couple of minutes, it'll become apparent why I did this. The business is worth, based on just straight math, a simple business valuation calculation would say, hey, this business is worth about $135,000, and that's mostly due to the revenue that it has. And so most entrepreneurs, I think, I don't know for sure, but most entrepreneurs don't know those other pieces of information that I just put zeros into. So most entrepreneurs don't know what their assets or their liabilities or their equity is. Most entrepreneurs don't know what their gross margin and their cost of goods are. And that's because this can be very confusing and kind of technically complex information to figure out. However, if you are able to educate yourself on the very basic parts of how the finances in your business are working, you're going to build an extraordinary business. I've always looked at finances as the feedback loop. So feedback, as an entrepreneur, you build a product or you sell or you offer a service and you go into the marketplace and you sell it and you market it and you deliver it. And then your financial statements are supposed to be the feedback loop that tells you how well is all of this going. And so your profit and loss statement says how much money do we make, how much do we spend, and how much is left over. Your balance sheet basically says, of everything that's left over, what are we doing with it? Are we buying assets? Are we paying down liabilities? And between those two things, is our business building equity? Because that's what it should be doing. So in the case of the business valuation I just entered, where there's basically no balance sheet, there's gross revenue and profit. Again, keep in mind that this is an individual that was looking to buy the business, so they're probably just doing due diligence. But in this particular case, if they had more than just their revenue and their net profit, they could probably see that their business is leaving at least $30,000 on the table. So if you were selling this business, it's fair to say that you're leaving $30,000 on the table just right out of the gate by not having your balance sheet put together. I think the reason most entrepreneurs, again, struggle with understanding how their financial statements work is because it is sort of confusing. They don't really know who do they go to for help. They hire smart people. They think that smart people are the ones that are going to be able to help them. And so they end up doing nothing, and their business becomes something that's very frustrating to manage because they're not really sure what they're supposed to be doing with it. And my hope is that if you could get a business valuation done like the one that we're doing right now, that you'd have some direction. So this is a business in the food services marketplace. So if you looked at comparable businesses that were doing the same thing as this particular business with $365,000 worth of gross revenue, their gross margin should be about $230,000. So you sell a bunch of food product for $365,000 after you pay for all of the food itself. The business should have about $230,000 left over to pay its expenses. And after it pays all of its expenses, it should be generating about $27,000 in profit that the business would then use to either purchase more assets or to pay down its liabilities, or quite frankly, maybe just reinvest into more staff or into getting the help that they need to run the business. So in this particular case, the business that we see here is generating $45,000 in profit. So on gross revenue of $365,000 for comparable businesses in the food services market, $45,000 of profit is amazing. It's got a profit margin of about 12%. The industry standard is probably about 6% or 5%. But what we don't know is we don't know the numbers in between. And so I think if someone was looking to purchase this business, they of course are going to want to spend some time trying to figure out, okay, what does the business spend to generate that kind of gross revenue? What are they spending in terms of their expenses to get that kind of net profit? Does that include or not include the owner taking out wages? There's like a whole bunch of stuff that you can figure out or that you'd want to figure out before purchasing this particular business. But I didn't pick this business valuation to talk about because it presents as maybe a good business to buy. I picked this business valuation because the impact of not knowing your financials is significant. In this business, we don't know anything about the assets that the business has. We don't know anything about the liabilities, and we don't know anything about the equity. All we're told is this is how much money my business generates. This is how much is left over after it pays all its expenses. And I think that that's typical of how an entrepreneur thinks of their business. At least in my experience, it is. An entrepreneur will say, we do this much in revenue, this is much is left over, but they don't really know how anything else in their business is working. And so from a selfish perspective, an entrepreneur spends an enormous amount of time on their business, day in, day out, dealing with issues, fighting fires, finding opportunity, dealing with problems. There's a lot of energy, resources, and effort that goes into making a business work. If as an entrepreneur, all you know is how much money your business generates, how much profit it makes, but you know nothing else, then that begs the question, how do you know that any of this is even worth it? Is your business worth the effort, energy, and time that you're putting into it? And if you don't know your balance sheet, which means if your business is profitable, like this example, but you don't know what you're doing with that profit, are you buying assets? Are you paying down liabilities? Are you reinvesting back into the business? Like, what are you doing? And you don't know what your business is really worth, because valuing a business only off of its profit and loss statement without looking at its balance sheet means that either there's something really wrong with the business and no one wants to present the balance sheet. More times than not, it's that the balance sheet isn't correct. And balance sheets can be a little tricky. I mean, in concept, they're not really. Here's what you own, here's what you owe, here's what's left over as equity. But a lot of times an entrepreneur, if they have their financial statements up to date, they generally have their profit and loss statement up to date. They don't have their balance sheet up to date. And so it's really tricky to try and figure out, where does the profit from the business go? Because the balance sheet is where it ends up. So I picked this example because I think there's a lot here for an entrepreneur to think about. And I wanted to be able to say it out loud, that you need to know your balance sheet. You need to know what your business is doing with the cash that it generates or the profit that it's making, or maybe not. Because if you're not doing that, there's a greater question that needs to be asked, which is what I'm doing even worth it? Because let's face it, running a business is extremely tiring. It saps the life out of you. And it's great. I'm one of those entrepreneurs that has sort of some greater than profit reasons for why I do what I do. But the old saying that you can't help others unless you can help yourself really comes into effect when you're talking about, is my business worth it? Is what I'm doing worth it? Sure, I'm creating jobs for people, or sure, I'm giving myself something to do every day, but is it the best use of my time? Could I be doing something else and getting a better result? Or maybe the more important question is, if I took time to understand at a very basic level what my business was worth, would I make different decisions? And would I then take those decisions and hold myself accountable for building something valuable? And then as you get your head around that general idea as an entrepreneur, there's lots of things that start to change in your thinking. All of a sudden, you start to think to yourself, do I have the right people on my team? Am I making the most of the assets that I have? Like, what would it take for me to move my business forward? What do I need to be focused on? In my finances, what do I need to be focused on? In my operations, what do I need to be focused on? In my sales and marketing, what do I need to be focused on? Because all three of these things, I'm supposed to be moving them around every day to get the result. Well, what's the result? The result should be a valuable business, or at a minimum, a business that is worth all of the effort that's being put into it. And if you're not sure how you'd get out of your business, you don't know if you'd sell it, if you would wind it down, if you'd sell it to management, whatever the case might be, that isn't as important today as understanding what your business is worth and what do you have to work with. And every day you're pouring your life into this business, and is it ultimately worth that effort? So I picked this business valuation because I think it reflects a lot of what the average entrepreneur knows about their business. They know how much money their business generates. They know roughly how much profit is left over at the end of the day. But between those two things and everything else, they're lost. They don't even really know where to begin. So I would encourage you, if you're listening to this or watching this, go get a business valuation done. MLENOW.com. It's free. It takes like a minute, not even a minute, probably like 30 seconds. But if you approach it honestly, you're going to, and whether you agree with the valuation or not is separate and aside from the fact of having a starting point for having a conversation about, is the value that I'm creating every day, is it even worth it? Do I even know what that value is? It's hard to argue about the value of your business if you don't even know what it is to start with. So do that, take that step. And if you want to build a valuable business, then you simply have to become intentional about, what is making my business work? What is working well? What am I doing with the results? And then how do I keep doing that to continue to build value? Because ultimately I'd like to expand. I'd like to grow. I'd like to sell. Maybe I'd like to go IPO one day, go public. Whatever your wildest dreams can imagine, you still have to have a basic understanding of how your business works, what the feedback loop of your financial statements is telling you. And I personally believe that a business valuation is the best way to do that. So hopefully you found this valuable. I would encourage you, MLENOW.com. Go do this for yourself and take the time. It's not hard to do. It can be daunting because it sounds really, really technical, but it's not. What does your business own? What does it owe? The difference between those two tells you what it's worth. What does your business earn? What does it spend? The difference between those two numbers tells you how much profit you have. So then the only other question is, what are you doing with your profit? Are you buying assets? Are you paying down liabilities? Or are you just reinvesting it back into the business to hire more people and grow? If you're doing all of that without a roadmap, sorry to hear that, you'll probably be one of those statistics. But if you want to beat the odds of failure, just take the time to have a basic understanding of what your business looks like and do it through a business valuation, because I think that's the simplest way to do it. And keep using the same math every time you check it so that you can see how your business is working. So thanks for joining. Thanks for hanging out on this live stream. Make sure to subscribe or hit the notification button, or drop some comments in the comments box. You can also reach out to me directly. I'm a really easy guy to get a hold of. I love entrepreneurs. I do these live streams, podcasts, blogs, simply to meet other entrepreneurs, because I think that it's a really great community to be a part of. And once you get into it and you meet some really cool people, there's a lot of encouragement that comes from it. And you realize that you're not as alone as you might think that you are. And you're also not as unique and as special as you might think you are, because the challenges that you're facing are faced by everyone trying to run a business as an entrepreneur. So thanks for hanging out, and we'll catch you on